Hey everybody, I'm Jess Birken with Birken Law Office, joined again here with Megan Tarnow from Mobius Group, and we are going to talk about your favorite subject, cash versus accrual accounting.
Woohoo!
Holla! So now, I know at my law firm, I use cash accounting.
What is that?
So, and correct me if I'm wrong, my understanding of cash accounting, cash basis, is that when expenses occur, that's when they're on my books. Expenses are recognized when they happen, and revenue is recognized when it hits my bank account.
It sounds like you might actually be on the kind of a modified accrual.
It's possible.
Because on the cash basis, you'd only show that expense when you cut the check, when you pay it.
Mm-hmm.
And so income shows up when you get the money in hand, and expenses when the money goes out the door.
Yep. So then, can you explain the more complicated one, accrual?
Yeah. Because nonprofits, again, we talked about this videos ago, but they're corporations, right?
Yep.
So they're supposed to be keeping their books on the accrual basis. They're required to keep, grants on the accrual basis.
Yep.
So if they get a letter from somebody saying we're going to give you money, they have to recognize that revenue as of the date on the letter. Right? And ideally,
So when you say that, do you mean a pledge?
Yep.
Like even just from an individual?
Yep.
Like May 1st, I'm going to make a $5,000 donation.
Yep.
You
So
put
that's
that
why,
in now?
if you get those phone calls, people asking you for money, and they get you to commit, I will send you a check for $50. If you were to look at that organization's financials, they recorded your $50 on the day you had the phone call.
Oh, that's super interesting. That
Yeah.
seems like so much extra work, because what if I don't give them the $50?
Then they have to write it off, or they get to nag you. But legally, they can come after you for that. I mean, they probably won't, because that would be awkward. And
That
they
would
don't
be
wanna
not
get
good
you
donor
angry,
relations.
But no, but they could, in theory.
All right. Funny.
And so accrual too, we're booking revenue when it's promised, and we're booking expenses when they occur.
Mm-hmm.
So for the most part, we're, when a bill comes in the mail, we're entering it into the system as of the date of the bill date. But sometimes people don't send you a bill. So if you, were to rent somebody's space, and you know you're going to have to pay them $5,000 for that space in your event, April 15th, and April comes and goes and they haven't sent you a bill yet, and May comes and goes and they haven't sent you a bill yet because they don't have an awesome bookkeeper on staff, you still should have recorded that expense because you need to pay them.
Interesting.
And you get, and the whole point of that is so that people can look at your statement of position, your balance sheet, and have a sense of all the money that you owe people, but also all the money that people might owe you.
That makes sense.
Yeah. And then there's crazy stuff that nonprofits have, like prepaid expenses.
Sure.
So I signed a contract for insurance, and my fiscal year maybe ends on December 31st, but my policy period for insurance goes from October 1st through the end of September.
Yep.
Then all of that, the expense that's for next fiscal year needs to be a prepaid expense.
Or if you've prepaid your rent or something
right.
like that.
Health insurance, almost always. Rent, almost always.
Interesting.